want to talk about how American homeowners got $3.2 trillion richer in the past 12 months in the year 2021. On average, the American homeowners' equity increased by 31%. A 31% increase in equity equates to about $56,700 per homeowner in the US. That's a 17% increase in home value over a 12-month period, which is huge. Today, I want to talk about how you can help your past clients, prospects, leads, credit turndowns, your past databases enter the market and take advantage of the unprecedented levels of home equity. I want to talk about how we can help you do that in conjunction with your MBS Highway toolset, specifically the MBS Highway Debt Consolidation Tool. I have Diana on the call today. She's going to walk us through the toolset and how it can help you convey the value of doing transactions to take advantage of equity, even in a rising interest rate environment. So, if you are wondering how you can find opportunity for these kinds of transactions, today I want to talk about the MonitorBase Predictive Marketing Toolset. Using a predictive mortgage marketing tool, you are able to identify people in your database, whether it's a past customer or a lead or a credit turndown, someone in your database, all you need is a name and address, is in the market or about to be in the market for a mortgage. And predictive analytics can tell you some incredible information. If you upload to the MonitorBase platform a name and an address, we're able to go to that person's credit profile, their online behavioral profile, other aspects of this person's life and see, do they currently have a mortgage? What is their estimated LTV? What's their current debt load and payment on that debt? What's their current loan program and rate and equity? And all of these aspects come into play, and it helps us identify for you those people in your database who are good candidates for these cash out transactions. And we notify you of those as, hey, here's a cash out transaction, or here's a debt consolidation, or customers with a home equity line of credit who would benefit from a cash out transaction on the overall mortgage. Even when they go from, at the example you'll see here in a moment, a 3% interest rate to a 4% interest rate, how that can still make a lot of sense. And I want to go through how these tool sets are used in conjunction with other technologies, because our solution of how we're going to get through a changing marketplace, you're not going to find a one-stop shop of one place takes care of all of your needs. It's about finding and putting together the correct tech stack, things that have synergy, that when working together, they're more powerful together than each of them are independently. So today I want to talk about how you can use the MBS Highway tool. Now, rather than myself go over that information, I have Diana from MBS Highway who's going to be able to cover those details for you today. She's does an awesome job conveying exactly how the tool set works and how you can communicate that message. And honestly, take notes. Her presentation is in a lot of ways exactly the presentation you want to be giving to your customers. But more than that, she helps show you how you can be more of a consultant and an advisor to your clients, helping them answer difficult questions in a challenging environment. And so without further ado, let's look at how you can use a MonitorBase predictive marketing alert to find opportunity out of your past customers and pair that with the amazing tool set that MBS Highway has, particularly today, the debt consolidation tool, in order to help your customers take advantage of these incredible levels of equity.
Yeah, William, what an opportunity we have right now, even with rising rates and all the headwinds we're seeing in housing and in the economy in general. It's really important to become an advisor rather than just a salesperson and, stop depending on selling by rate. I mean, it's been a long time since we were able to do that. Now, last year, for example, was a gift, and we took that gift and we used it and we had the greatest year in production yet. We want this year to be even better. So what I want to show you now is the debt consolidation tool on MBS Highway. So taking a look at a scenario here, we're looking at a customer that purchased a $500,000 home a couple years back, and that home has now appreciated to about $650,000. So they've definitely built a nice chunk of equity in that home. On top of that, they currently have a 3% rate. Let's just say the rate today that you have is 4%, but this customer already put 20% down. They don't have mortgage insurance. They have a pretty solid rate, and their P&I is $1,686 a month. Now, with that higher rate, as expected, the P&I would go up to almost $1,800 a month, But on top of that, they have all these different debts that they're paying off. Their taxes and insurance stay the same, but as mentioned, they have their installment, revolving, and other kind of debts that they're paying each month. So again, because of that higher rate, their monthly payment would go up by about $72. On top of that, you're not saving the mortgage insurance and you're throwing $4,000 in closing costs on top of it. It simply doesn't make sense. If the customer says, I don't want to do this, you kind of can't blame them. But taking a step forward here, you have a ton of equity, as I mentioned earlier, in this home that you can tap into. Here's your current equity, or your LTV, I should say, and here's your LTV limit. We have about $116,000 of equity to tap into here. Even just clicking on this first debt and paying off that Visa, increasing that loan amount, look at this, we're already saving that customer $245 a month. I mean, you can stop there. That's a great gift to give to your customer. But what if you take it a couple steps further, include all these different debts? Now you're looking at about $1,500 a month in savings. I mean, I don't know about you, but if my loan officer called me out of the blue, and even though rates are a little bit higher and they showed me this scenario, I'd be pretty interested. Taking it another step further, take a look at this even more equity you have in your home, about $58,000 that you can still tap into. Within the debt consolidation tool in the inputs, you can even take some cash out for the customers, tap into that equity. But taking it a third step further, what if we change nothing? What if we act like this refinance never even happened and change this customer's life for the better? Why don't they take that almost $1,500 that you're saving them? And if they could afford the same payments they're making now, why not put it right back into their mortgage? And what's the benefit there? No longer do they have a remaining almost 26-year term. I mean, that's a big worry for people. To refinance, you're getting into a whole nother 30-year term. Instead of seeing that, you're only going to have a loan term of 13 years. You've saved them about half the time. Expressed differently, they would have had to make about 310 payments. You're cutting that in half. They're only making 156. And then your customer might ask you, don't you have to wait until the whole life of the loan until it's paid off to see these benefits? Well, no, not necessarily. Just after 5 years, you would have only amortized about $50,000 in equity. If you did it our way here and took our advice, you would have gained an additional almost $89,000 in interest, or excuse me, in equity. And then after the life of the loan, after that 13 years, the customer would have had a balance still of $216,000. If they took your advice, went with you, they have a $0 balance increase in their net worth just by that amount. And it's a tough time right now. We know that. So a lot of people want to have cash in their hands, and that's just fine. So if they click on this little pencil icon here, let's just say they want to pocket 700 and reapply almost 800 towards the principal. You're still saving that customer over 8 years on their mortgage. You're cutting their payments by 100 payments and increasing the net worth by about $150,000.
I really appreciate the presentation, and I love the concept of being able to present the option to continue paying extra. I think it's such a big deal to not reset someone back to a 30-year. But beyond that, the step further of saying, this is how you can make this gigantic financial progress in your life. In the second scenario that you gave, even cutting their monthly obligations by about $700 per month, they're still over $100,000 more money in the bank within a relatively short period of time. I think it's just such a big deal to be able to present that to the customer and show them that this isn't a fight for interest rates. You're fighting for this big number. It's not about saving just a couple of dollars per month. It's about these really big outcomes over the long term. So I love the ability to present that you guys have put together here.
Absolutely. And like I said, we know it's a really tough market out there right now, but taking any opportunity you're given is really crucial. So even just going down your past pipeline and seeing a customer with a 3% rate and you can offer a 4% rate right now, we know it doesn't look pretty on paper, but when you can show a customer a piece like this, it's tangible, they can play around with it themselves, decide what debts to pay off, it's a game changer. And not only that, you can also use this with your referral partners. I did show you a refinance scenario here, but you also have a purchase option that greatly helps customers. So again, using MonitorBase and MBS Highway together really makes you unstoppable.
It's such a symbiotic tool set. So I really appreciate you doing the introduction to the tool here. I know that what you guys have to offer is amazing and people are loving it. So we're just happy to be able to be a small part of that and show how the systems can work together. So thank you so much, Diana.
Thank you.
Anybody who isn't thinking about how they can help their borrowers take advantage of that equity as a strategy for capturing more business in 2022 is missing out on one of the biggest opportunities that they're going to have this year.